What is Forex? Forex, is short for foreign exchange, is the global marketplace where currencies are bought and sold. It's the largest and most liquid financial market in the world, with daily trading volume exceeding $7 trillion. Here are the key points. Purpose: traders and investors exchange one currency for another, often to profit from changes in exchange rates or to facilitate international trade and travel. Market structure: unlike stock markets, Forex has no central exchange. It operates 24 hours a day, 5 days a week through a network of banks, brokers, and electronic trading platforms. Currency pairs: trades are done in pairs, e.g., EUR/USD, USD/JPY. The first currency is the base currency, and the second is the quote currency. Participants: banks, governments, companies, hedge funds, and individual traders. Risk and leverage: Forex offers high leverage, meaning you can control a large position with relatively small capital, but this also increases the risk of losses. Understanding a currency pair: for example, EUR/USD equals 1.1500. This means 1 euro is worth $1.15 USD. If you think the euro will get stronger, you would buy EUR/USD. If you think the euro will get weaker, you would sell EUR/USD. Making a trade: let's say you buy 1,000 euros when EUR/USD equals 1.100. You spend $1,100 USD to buy euros. Later, the price rises to EUR/USD equals 1.120. Now 1,000 euros is worth 1,120 United States dollars. You sell your euros back and make a profit of 20 United States dollars. The same works in reverse. If the price drops, you would take loss. Leverage: the double-edged sword. Forex often allows leverage like 150, 1 to 100, or 1 to 1,000. Example: with $100, you can control $5,000, $10,000 worth of currency. This means profits and losses are magnified. A small move can double your account or wipe it out. Forex trading can be profitable, but it's high risk, especially with leverage. Most beginners lose money at first, so learning strategies and practicing on a demo account is critical. How traders make decisions: technical analysis, reading price charts, patterns, and indicators; fundamental analysis, news, interest rates, economic events; risk management, stop losses; position sizing to protect capital. What is slippage? In Forex and other markets, slippage happens when the price you expect for a trade is different from the price you actually get. Why slippage happens? Market moves fast. Prices can change in milliseconds, especially during high volatility like news releases. Low liquidity: if there aren't enough buyers or sellers at your requested price, your order gets filled at the next available price. Order execution delays: even small delays between clicking buy or sell and the broker processing your trade can cause a different price. Example of slippage: you want to buy EUR/USD at 1.100. You click buy. By the time your order executes, the price moves to 1.103. You experience 3 pips of slippage. This can be negative slippage: you get a worse price, costs you more. Positive slippage: you get a better price. Rare, but possible. There is a chance your stop loss won't trigger exactly at the set price due to slippage. Here's why. How it works: a stop loss is a market order once triggered. In normal conditions, it will close at or near the set price, but in fast-moving or low-liquidity markets, the price can jump over your stop level before the order is filled. The order will then execute at the next available price, which could be worse than you expected. Example: you set a stop loss at 1.100 on EUR/USD. News event causes a sudden price gap from 1.105 to 1.0980. Your stop is triggered at 1.100, but no liquidity exists at that price. Order fills at 1.0980, gives 20 pips more loss than planned. Key takeaway: slippage can cause your stop to be missed or executed at a worse price. This risk is higher during high volatility news releases, market opens, low liquidity hours. What is swap? In Forex, a swap is the interest fee you either pay or earn for holding a position overnight. Why swaps happen? Every currency pair involves two currencies with different interest rates set by their central banks. When you hold a trade overnight, you're essentially borrowing one currency to buy another. The interest rate difference between the two currencies determines whether you pay or receive a swap. Example, you trade a USD Euro interest rate, 4% USD interest rate, 5% if you buy Euro USD, you borrow USD 5% and buy Euro 4%. Since you're borrowing a currency with a higher rate, you pay swap each night. If you sell Euro USD, you borrow Euro 4% and buy USD 5%. Now you might earn swap because you're borrowing the lower rate currency. Key points. Swaps are charged or credited at rollover time, usually 5 p.m. New York time. Some brokers offer swap-free accounts, often for religious reasons. The swap can be positive credit or at negative debit depending on the trade direction and interest rate difference. What is trading platform? In Forex, trading platforms are software applications, desktop, web, or mobile, that allow traders to place trades, analyze charts, and manage accounts. Here are the most common Forex trading platforms. MetaTrader 4MT for most popular Forex platform. Worldwide. Supports manual trading, automated trading, expert advisors, and custom indicators. Very light and stable, works on most devices. Best for beginner to intermediate traders. MetaTrader 5MT5 successor to Mount 4 with more features, more time frames and chart types, so built-in economic calendar, more order types including stop limit, supports both Forex and CFD trading. Best for traders wanting more tools and asset variety. C-Trader known for fast order execution and better level to market depth view. Modern interface with advanced charting tools, great for scalpers and day traders. TradingView broker integration, web-based platform famous for advanced charts and social trading. Community. Some brokers integrate TradingView so you can trade directly from charts. Best for chart-focused traders. Proprietary broker platforms. Some brokers have their own platforms. Examples: ThinkTrader, ThinkMarkets, WebTrader. Many brokers offer MT4, MT5 in browser form. NinjaTrader more common for future use, but some Forex support. Summary: MT4, MT5 equals most common, huge community. Works with most brokers. Trader equals modern, fast, good for scalping. TradingView equals best charts. Can integrate with some brokers. When traders talk about the classification of the best Forex brokers, they usually group them based on their regulation, execution model, trading conditions, and services. Here's a clear breakdown. Based on regulation: Tier 1 regulated brokers, most trusted or regulated by top authorities like FCA UK, ASIC Australia, CFTC NFA USA, IROC Canada, CISIC Cyprus. High transparency. Strong client fund protection. Example: IG, Pepperstone. IC Markets Tier 2/3 regulated brokers, less strict jurisdictions. Regulated in offshore, lightly regulated areas: Belize, Seychelles, St. Vincent. Often offer higher leverage but lower protection. Based on execution model: ECN broker, so connect traders directly to the interbank market. No dealing desk. Tight spreads, but commission fees apply. Better for scalpers and pros. STP brokers. Straight through processing, route orders to liquidity providers. Usually variable spreads. No fixed commissions. Market makers dealing desk. Take the opposite side of client tradeso. Fixed spreads, often better for beginners but potential for conflict of interest. Based on trading style and services: low spread brokers, best for scalping and high frequency trading. Example: IC Markets, Pepperstone, Tickmill copy trading, and social trading brokers. Example: Vitoro, Zulu Trade integrated brokers, high leverage broker, so often offshore. Leverage 1 to 500 plus. Example: Exness. Fexlory, high risk, beginner friendly broker, so easy platforms, lots of education. In short, regulation equals safety, execution model equals trading conditions, features equals match your style, scalping, swing, copy trading, etc. That's for now, and see you in the next one. If you want to know more on this topic, let me know your thoughts in the comments below. Don't forget to hit the notification bell, like, share and subscribe so you don't miss the next one. Bye for now.